day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'll be taking you through today's market fundamental and technical breakdown for the time period of January 8th to January 12th. So I'll be sharing my screen shortly. Okay. So if this is your first time, my name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane. 10x Digital Lane is where everyone who has a knowledge gap in digital trading, real estate, short-lived property business, e-commerce, and AI technology can be able to come and learn the necessary information you need to master this industry and make money from this industry. So currently, you are watching the Forex forecast. Okay, and how this goes is that we're breaking down for you three important things. Okay, three important things. First of all, we're breaking down for you the market direction. After we break down the market direction, we also break down for you the fundamental. And when we say fundamental, we talk about the macroeconomics going on in the world, about the banks, the government, the different economies we have, and we'll be checking out lastly the sentiment. The sentiments around this particular market sentiments. Okay, I'm going to show you how we work with this. So that's what we'll be doing. We first of all start with the market direction, which has to do with our own forecast, what we think and how we think the market is meant to react. Then we go to the fundamental, which has to do with the news, and sentiment, which has to do with the total market population and how the total market psychology is going towards the market. So now we start with DXY. DXY signifies the strength of the dollar, and if we start on the higher time frame, on the daily time frame, so currently on DXY on daily time frame, if I zoom out, what do we see? We see an expanding flat, expanding flat. Okay, but let's say most traders know different type of trends. We have uptrend when the market is trending to the upside, like over here. This is an uptrend when the market is trending to the upside. Okay, then we have a downtrend when the market is trending to the downside, and then we have a sideways trend. So if I'm to zoom out fully on DXY, so we see the structure of the market very well. If I'm to zoom out fully, what I see on DXY is more of an uptrend. And based on the psychology of trend lines, why we draw this trend line is for us to be able to know that whenever the market is close to this trend line, that's a good point for us to buy. It's very close. And what I mean is, for instance, the market is at this point. It is not a good idea to buy because this market is far away from the trend line. And also, yeah, the market is not a good idea to buy. The market is far away from the trend line, this trend line. So whenever the market is far away from the trend line, what are we looking for? We're looking out for sales, okay? And whenever the market is far away from the trend line, we're looking out for sales. But whenever the market is close to the trend line over here, this is a good spot to be looking for buy opportunities. Whenever the market is close to the trend line, capish? Okay. So since that is understood, on DXY on the daily time frame, we can see that the market had a massive expansion and went far from the trend line. And over here now, it had a lot of what? Ranging, creating an expanding flat. Okay, creating an expanding flat of this particular range. Then let's go to the 4 hours time frame. Meanwhile, we already know that the market is not yet close to the trend line, but about 50% close to the trend line. Then when we go to the 4 hours, we see a different structure. The structure we see on the 4 hours is that we see something that looks like a downtrend on the 4 hours. Okay, so since we see a downtrend on the 4 hours, and we know that the market is not really close to the trend line yet, but it's about 50% close to the trend line, we can aim to get in for the sell signals for DXY, the sell signals for the DXY. So since that's confirmed, structure wise, what can we see on DXY? Structure wise, what I can see on DXY is that at this point the market broke this low. Okay, and since it broke this low, it created a new low. So the market has been literally creating what? Lower lows and lower highs. Lower low, lower high. Okay, so if we are to mark it out, the structure we see currently on the 4 hours, which we already know that when the market is trending to the downside, we always have what? Lower lows created and lower highs, which means that this high is lower than the previous high, which was this, and this low is a new lower low created, lower high, lower low, lower high, and we're looking out for the next what? Lower low for DXY. Okay, so in that case, let's zoom in now and let's go down to a smaller time frame. Okay, so last week we saw NFP play out on Friday over here. We saw NFP play out on Friday over here, and then the market bought for DXY massively before the market sold off. So if I'm to look at the market before that reactions in the market, before the NFP reactions, what I could see was that we had a little resistance here. We have a little resistance here, and we also had support here. We had resistance and support here. Okay. So for resistance, the market, when retail traders see resistance, the ideology they have is that they need to sell. And when retail traders see support, the ideology there is they need to buy. So when the NFP played out, the market used the NFP to take out the liquidity above here. There are a lot of sellers here that sold the DXY, and the market, they bought the DXY instead at the start of the NFP. So they took out those who are selling the DXY at this point. Then the market rallied down again and then took out those who are buying the DXY from this point. So liquidity was taken from both sides here and here. So now market created an order block over here after that liquidity was taken out at this point. So let's refine that order block. Let's go down to a smaller time frame. So on the 30 minutes time frame, see this last green candle before this change of character, which was the support level was taken out. That is exactly why I see the market coming to create the entry for DXY and shorts for DXY. So literally, I'm aiming for shorts for DXY to short the DXY because market has already created what, a lower high, and we need to see the next what, lower low to be created. Okay, so that's what I see for DXY. So in that case, let's go down to other pairs like Euro USD. So Euro USD is about 80% correlated with the dollar. So if the dollar is buying, Euro USD is selling. If the dollar is selling, Euro USD is buying. Okay. And what I see currently on Euro USD is the market has been creating uptrends. You can see, and due to the market has been creating uptrends, I expect the market to give me some kind of rejection into this other block that was created over here. This other block that was created because the same liquidity that was taken out on the dollar angle, which was taking out supports and taking out resistance at the same time, we see the same liquidity over here as well. And we see an order block there. If we go to a smaller time frame, we'll spot out the order block. Okay, let's go down lower. Okay, so this is the other block I see over here. This was the last red candle before the market took out this resistance here, which was had liquidity lying above here. So from there, I should be expecting mitigation and then market going to the upside. So that is it for Euro USD. Let's go to the next pair, gold. Gold. Okay, so I'm on gold daily time frame. What do we see on gold daily time frame? Okay, let's zoom out. Okay, so on gold daily time frame, I see markets has been consolidating within this price over here. This is the low over here. So the structure mainly is a ranging structure for gold. That's what I see. The structure for gold is a ranging structure, but market had its trending time. Market had its trending time at this point. It trended, and then the trend went into a consolidation for quite a long time, and we have been inside this consolidation. So currently, I can spot that we have this high, this high, this high is a triple touch high, and gold made a break above that triple touch high over here. Then grab liquidity and is dropping. So meanwhile, before I continue with gold, I would like to check the sentiment of the Euro USD pair we just checked. So if I go back to sentiment, we can see that over here we have 55% short and 45% long. So I'll be going with the minority, which is the longs, which is the 45%, because the majority, which is the short of 55, is mainly retail traders. But I'm going for the long, which is 55%. So for gold, okay, yeah, for gold, we can see that we have a trend line on gold over here. And when the market was far away from the trend line over here, it was a good idea to sell. Okay, because market took out liquidities over here and then started dropping to the downside. So about market is about 60 to 70% close to the trend line now as I speak. Okay, and in that case, I won't be looking out for my sell setups, but I'm looking out for buy setups instead for gold. Okay. Although we dropped a signal on gold before NFP last week, and my students, we made about 1 to 2 of our accounts. We were risking 40. Let me show you the signal, and it was an accurate one. Before NFP, we dropped this signal, and the market came back to this other block, mitigated it, and then came back, gave us 120 pips profit, and then reversed on us. So we called out the signal. If you want, if you never want to miss such signal like this, go to the comment, the description. You're going to see our Telegram channel. It's free. Click there and you join the Telegram channel. We send genuine and accurate signals. We don't send based on quantity. We say based on quality. So if I go to the 4 hours on gold, I see that the market has been creating what higher highs and higher lows. This is a higher low, higher high, higher low, higher high, and has been reversing. So if we look closely, you can see that the market created this other block. Okay, and there was a change of character over here, which is the there was a change of character over here. And when market created that change of character, there's another block lying here. Okay, so I think the market is coming back into that other block. And when you come back into that other block, we are about 70% close to the trend line. So from there now, when the market is inside this other block, we'll now start look. We'll now go down to the smaller time frame to be able to find possible entries. Okay, possible entries and change of structure to be able to what take the buy trade to the upside for gold. So what I expect mainly is when the market comes here, we're going to tap into this and create some kind of manipulation. Then the real direction comes in when they come back for the main trade. This is where we get in, and that's what I see for gold currently over here. So that's what I see mainly for gold. Okay. Okay, so let's check the sentiments for gold. XAU USD. XAU USD. XAU USD. Okay, so for gold, we have currently minority is 49% short, and long is about 51%. So I think we're going with the minority for gold. Currently, the market is selling. I can see that. But overall bias before the week rounds up. Today is just for mentorship. Today is just for our forecast. But we'll be doing some live trading tomorrow, Tuesday, Wednesday, and Thursday. London session by 8, New York session by 1. So don't miss out. This is an opportunity for you to learn and as well trade with us live, okay, by those times. So that's what I see mainly for gold. Then let's go to the next pair, US oil. So for US oil, we start with the higher time frame. Okay, so for US oil, we see market has been creating what lower lows and lower highs, lower low and lower highs. Okay, that's what the market has been creating: lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and it created a trend as well. So that's what I see mainly for US oil. And if you look clearly, out. You see that this was what is trend to the downside. This is a corrective structure under impulse. Okay, so we're waiting for the next massive impulse, but it's going to come in bits. So that's what we see. The market is creating what has created the lower low, created a lower high, and now it's creating the next lower low. And let's go down to the smaller time frame, the 4 hours. And if you look close at the 4 hours, you see the market is respecting that trend line smoothly. It's respecting that trend line smoothly. So if we are able to see a break of this trend line, we can expect market to come back to this resistance, and then structure could change. But since the trend line has been respected, we will now be looking for the setup on the lower time frame, probably the 15-minute setup. So currently, I see market has been able to create this a massive impulsive move to the downside, and which is a change of character. Okay, it broke these levels over here. So if there's any little pullback, we'll be getting our sell entries. But if there's a change, a little pullback, we're getting our sell entries and then taking this trade to the downside for US oil, because the market is about 90% close to the trend line. So we'll not be looking for buy setups, we're looking for sell setups instead. So that's what I see for US oil. So the next on the list is Bitcoin. Okay, so for Bitcoin, what I see mainly is that market has a lot of liquidity lying above here, and above here is where I see weekly resistance. We have a daily liquidity as well there. So the market is heading into here to grab that liquidity, which is about 46,700. Let's say $47,000, and from there we now start seeing the main impulsive correction. Okay, so at this point now, we can be watching out for the buy setups for the Bitcoin pair. Watching out for the buy setups for the Bitcoin pair, and from there we can be able to see what market rallying to the upside. You can see some potential areas of entries where we have massive entries. You can see we have 2.40k, we have 2.21k. So there's a lot of entries that played out along this area for Bitcoin, and that's between 43,200. So if we are going for this, we'll be aiming for this, and when we get to that area of liquidity, then we can stop aiming for that buy trades and then start looking for the sell trades. So that's what I see mainly for Bitcoin. So let's go into the fundamentals. So for fundamentals right now, we see today Monday, January 8th, 2024. We have Euro USD trade balance of trade. We had higher 20.4 billion euros, sorry, and this is Germany to be precise. What this means is that the imports and export is higher than the imports in Germany, which is good for investors, and which with sentiment we are seeing that we have a lot of buyers on Euro USD. Sorry, a lot of sellers on Euro USD, which is creating liquidity we need for the longs to go appropriately. Okay, but structure wise now, Euro USD is not buying, it is selling, but it's going exactly to our point of interest to mitigate the other block and then go to our direction. Then we have CHF, which we did not do any analysis on CHF today by 11 a.m. That's in about 33 minutes time. We have retail sales month over month and year over year for the Euro Central, which has to do with total sales of goods and services within the Euro Central for the November period. Okay, November December period. So tomorrow Tuesday we have in the morning, early in the morning, Asian session. We have GBP BRC retail sales monitor year over year. Then uh, Asian session as well. We have retail sales month over month for AUD. London session, we have unemployment rate. And then by 8 o'clock, we'll be starting our London session trade, which we have unemployment rate by 10 for Euro, Italy to be precise. And then if this figure, this is 7.8%. If you get something lower than 7.8%, it is a plus for Euro, which we've seen some buy setups for Euro. Okay. So Euro USD watching out for Tuesday by 10 a.m. Watching out for that because we're trading live by 8 and you see the buy setups, we're calling out the signals, and also you see the way we approach the market. Then by 11 we have Euro Central unemployment rate. We need the percentage to be lower than 6.5%. Currently we have 6.5 and 6.5, and here we have 7.8 and 7.9, which this figure is higher than this figure, which is bad for the Euro. So we need something that is lower. We need a figure that is lower. So if we get 6.5%, 6.5%, which is exactly as forecast, we can see this is just the medium rate there. You can still see Euro to buy. Or if we get something lower than 7.9, that's excellent for Euro. Then during New York session, we have New York session trading by 1. We'll start New York session trading by 1 tomorrow. And we have balance of trade for CAD and balance of trade for the dollar by 2:30. And that balance of trade is going to be minus $65 billion, and over here is minus 64.3 billion. Minus $65 billion is lower than minus 64.3 billion because based on ascending and descending in the arithmetic number system, you get minus 2, then minus 1, then you get 0, then 1 and 2. So minus 5 is lower than minus 64.3 billion dollars. So if you get something that is higher than minus 65 billion dollars, probably we get minus 64 billion dollars. It's good for dollar. If we get minus 63 billion dollars, it's good for dollar. But if we get something lower than minus 65, we get something like minus $66 billion, it's bad for the dollar. New York session. Okay, so watching out for that. That's an area of volatility and liquidity for us. Then on Wednesday we have monthly CPI indicator for the AUD. Then we have ECB speech on Wednesday, London session. We have ECB speech, we'll be focused on that, which could determine what they have to say about interest rates. But I know vividly that last week they said that they won't be cutting interest rates anytime soon because their inflation is high. They will be increasing interest rates instead. Okay, so that's a plus. Then by 10 a.m. London session, we have retail sales year over year for Italy. Okay, the previous day was unemployment rate for Italy, but on Wednesday is retail sales year over year and retail sales month over month for Italy. So if we get a figure higher than 0.7%, which is good, but currently what will be driving the market at the start of the day is Euro will be strong based on what I can see here year over year. And then over here, month over month is quite lower. 0.1 is lower than 0.4. So it's more like a neutral ground until the time 10 a.m. then gets the actual direction the market is going to take us to. Then on Thursday, we have a lot of news on New York session. We're trading London session early in the morning by 8 and New York session on Thursday by 1. We have continuous jobless claims. That is for the job market. The initial jobless claims, we know that they added a lot of jobs in the market, the private sector and the public sector last week. So the continuous jobless claims, it all depends on if you really want to be employed. But I think this figure is going to be lowered on Thursday. So currently we see jobless claims, continuous jobless claims 1855K and 1853K. This is lower than this. So it is a plus for the dollar on Thursday. Initial jobless claims, those who filed for jobless claims in January, we have 210K, which is higher than 202K, which is the bad data for based on the forecast, is the bad data for the dollar. More people applying for jobless claims, which is not good. But the job market there, we can see that there was jobs created. Then on that same New York session, We see jobless claims 4 week average, the same figure with the forecast of the initial jobless claims, but it is higher than this, which is bad. If you see a figure lower than 210K, which is good for the dollar, okay? If you see a figure lower than this, it's excellent for the dollar. Then we have CPI interest rate for December for the dollar, which is 305.7 and 307.05. So if we see a figure higher than this, it's going to be as well good for the dollar. Interest rate month over month for December is percentage wise, core inflation rate over a percentage wise, core inflation rate percentage, and then CPI ascertained for that is for December as well. The one we focus more is this CPI for December, which the figure is currently 305.7. So if it's a figure higher than this, is good for the dollar. So to round up the week on Friday, we have on London session, good trade balance, non-EU, which is for Great Britain, total imports and total exports. So if export is higher than import, it's good for the pound. But if export is lower than import, it is bad for the pound. So we have minus 4.2 billion pounds here, which is quite better than minus 4.82 billion pounds. Okay, so you get minus 4.82 billion pounds before you get minus 4.2 billion pounds. Okay, so good trade balance, just to do the actual figure for November, we have minus 16.5 billion pounds, which is better than minus 17.032 billion pounds, which is good. So you can see some strength in the pound on that Friday. We have GDP month over month, gross domestic product percentage wise, and as well CPI for Spain, which if you see a figure higher than 113.3, it is good for the euro pair. And you can see currently we have a neutral ground there, no actual direction. To end the week, New York session, we have PPI, producer price index month over month. We have 0.1% against 0.0% as well. So we're watching out for this. So don't miss out on any opportunity as well. If you want to learn more about forex trading, the basic, what is forex trading, the softwares we use, the recommended brokers, and also you want to get $5,000 startup capital, you can go to the description. We have our link for you to go and gain access to our course and gain access to our materials, our exercise book, and then our course materials, our signals as well. Just click on it, go to the description, you're going to see it all there. Click there, get the information you need, pay for the services, attend the classes, get the value you need, and then in your financial goals for the year. Okay, this is the start of 2024, and I pray that everyone is going to get what wealthy, both financially, health wise, spiritually, and so on and so forth. So, thank you for watching to this point. Our recommended broker is Hot Forex. The link is on the description as well. Join our social media handles on WhatsApp, Telegram, LinkedIn, TikTok, Instagram, wherever you seem comfortable. The link is on the description as well. To join our community, just click there, select the actual community you want to join, and we will see you in our community, keep you updated, and also give you the valuable insights you need. Have a wonderful trading week. Have a profitable trading week. We'll be sending the signals. Don't miss out on the free signals. The link is on the description to join the community. Peace.